Good morning, everybody. Welcome to the March edition of the Specialist Mortgage Web Show. I hope you're all well and doing okay so far this month. A little bit of a different show this month to what we normally do. A different location as well, as you can see from my backdrop. I'm not in the normal office. I'm working from home at the moment. So I'll crack straight on with it. For those of you that haven't watched one of our shows before, my name's Tony Sutton. I'm the Managing Director of Specialist Financial Services Limited, and I'm your host for today. You have to excuse me because I'm working from home. I forgot my clicker that actually clicks between the slides, so I have to use the mouse. So a little bit about me. We always do a little bit of a bio on every speaker that's on today. After almost 6 years with a specialist lender that I started with all the way back in 1983, and then worked for a broker for 15 months, set up my first commercial and second charge brokerage on the 11th of May 1989. Seems like an absolute lifetime. Well, it is a lifetime for many people. But obviously years and years ago. And this grew from a two-man operation to having 141 employees at its peak. But I left in 2004. I won't say what my business partner was, my ex-business partner was, but you can imagine, and set up Specialist Financial Services Limited. He went bust months later. Traded very successfully for 5 years until the crash came, took away all my lenders. Lots of clients, no lenders means you're not writing any business. But stayed with the market, and here we are today. I've now done 40 years in doing what I do. Don't know anything else. I've done 4 years of sorting checks into alphabetical order when I worked for Midland Bank from 16. But this is what I do basically, and is what I'll do until I decide to retire from the industry. And the other thing we also always do is a little bit of a claim to fame on each of the speakers. I've got a few because I've been around a while, but of course I ran out of things to say after all. I've only got so many claims to fame. So some of you might have seen this one before. In 1981, at the age of, 18, I think, joined the Green Man pub. We used to drink down the Green Man pub and joined their football team that was based in Stanmore in Middlesex. And we played in the Harrow, I have to read this because I can't remember, Harrow Sunday League against some really, really rough teams. I mean, I think most of the players were probably out on day release. It was that bad. But even rougher supporters. It really was quite often, it would just turn into a mass brawl during or at the end of a game. In my second season, a local businessman joined who was doing very well. He joined us and asked after a few weeks if his mate could join. Next session, this guy turned up, not dressed like this, I can assure you, because we would never let him join if he had, because that would have been silly. But he signed the registration forms and wanted to join us. And this was, and if my slides will work, they will work, Peter Duncan, who at the time was obviously very famous. It was on Blue Peter. Duncan Dares, I think, followed that a while afterwards. But he wanted to do something normal, which was probably the worst mistake he ever made. Because he soon realised that playing in the Harrow Sunday League against such teams as the Harrow Borough Supporters Club and the Apollo pub, where to actually drink in the Apollo pub, you had to be an ex-offender, I believe, made him a target of every thug in the league. And also every time he touched the ball, every support would shout out, "Give him a Blue Peter badge." He was known for his daredevil stunts, such as cleaning Big Ben without a safety harness, but he had to leave our football team because, believe it or not, it was too dangerous. So there you go. Our sponsor this month, Castle Trust Bank. Big thanks to them for their ongoing support, as always. A big part of what we do, Castle Trust, and they will be speaking shortly. Please remember, I've changed some of the slides today because I did this last night. We are depending on outsourced technology. I'm working from home today, so I'm dependent on my home office broadband, which is notoriously awful. But hopefully, fingers crossed and touch, full mic or whatever that is, it will be okay. Our work office broadband, because the team in the office are obviously monitoring us and doing all the work behind the scenes, and the speakers broadband, and of course, and they've already done it once. Came down this morning to find my laptop had done a Windows update, and was taking ages to actually load up. Normally because they get the because we're not using Teams. So please bear with us. Something does go wrong. We've got people behind the scenes who will fix it, hopefully, and I've got a spare laptop, or I can work with my phone, or whatever is needed to be done. But obviously, we are depending on outsourced technology. If you have a question, go to type your message in the bottom right corner, and we will try to get to all the questions we have if we have time. A little bit different. You'll see there's one missing this month. What we decided to do, some feedback we've had is that the shows at 3 hours were for some people a little bit too long. So what we decided to do was quite simply cut it down to 3 speakers, cut down what I talk about, and also cut the break in the middle. So this is a 2-hour show, not a 3-hour show. So it's 2/3 of the time for 75% of the knowledge, if you like. So we have 3 speakers, all banks today, which is unusual. And if you don't recognise the faces, you'll recognise the logos. This is who we have. First of all, we have Gary Maher from Castle Trust on, then Shawbrook, William from Shawbrook, and Mark Shelper from Tandem Bank. Today's objectives, as always, obtain a more detailed product knowledge within different areas of specialist finance. So we start with, not starting, but we're covering specialist buy-to-let. We're covering commercial mortgages. We're covering residential first charges. And we're covering bridging finance. Wish I remember my clicker, makes it so much easier. Each presentation lasts about 20 minutes, and it's a 10-minute Q&A after each session. And as I always say, the speakers have set themselves questions. Please don't give them an easy ride by not asking any questions. So ask as many questions. There's no such thing as a silly question. Just maybe read it before you click send, just so we will understand it, because sometimes we do get questions we think we're not quite sure what to answer on that because it's a bit broad. So ask the question. But let's say there's no such thing as a silly question. Your feedback and CPD, a feedback questionnaire will be automatically available at the end of today's show. We'll ask questions about today, what we can improve, whether you like the new format with less speakers or one less speaker, how you rate each speaker for their presentation, which is also very important. 2 of the 3 guys have done these many, many times in the past. One is new, but he's been doing this for quite some time, so I'm sure he's going to be absolutely fine. And as far as your CPD is concerned, it will be emailed to you by 5:30 tomorrow. We normally, I'd say every single show, we get a phone call or an email to say, I've not received my CPD. And that's about 2 hours after the show is finished. Of course, we never know how long the show is going to last. So we want to make sure we give you the right CPD. If this takes 2 hours and 20 minutes, we'll give you 2 hours and 20 minutes of CPD, not just 2 hours. We won't know until it's finished. So just basically give us until tomorrow to get that over to you. Check your spam before you contact us, because 99% of the cases, the email is actually sitting in your spam folder. Okay, updated guide now available, which I'm actually going to update a little bit later today as well, because there's been a couple of changes in the couple of days I've been off. So I need to get that done, but that will be available on the website. So you can download the current one, but maybe have a look at the end of the week for the new one. And there is a way to access this at the end of today's show. I will be doing away with these fairly soon, because it is now almost 6 years since GDPR came out, but probably still 50% of delegates have not done anything on GDPR. This will just help you to get yourself compliant. It takes literally 15 minutes for the first one and 10 minutes for the second one. I do it every year around May time, and just so I can show if anything does happen, if one of my staff clicks on, or I click on a dodgy link on an email that and we're held to ransom, then when the regulator comes in and when the Information Commissioner's Office come in, which they will do because they want to find the crap out of you, to be honest with you, you can show that at least you did something, rather than, no, I never bothered with GDPR because I thought it was a waste of time. It's just literally, it takes no time at all to do these. And I copied and pasted all this information from the ICO website, so we know it should be correct. Well, we hope so anyway. A little bit on consumer duty. This is something we came up with, which was a vulnerable customers guidance, the detail of what is classed as a vulnerable customer, and then what to do. And this is the big problem we have with our industry sometimes. And we have lots of people saying to us, yes, this is something you need to look at. Consumer duty is a great example recently, with all the detail in that, but no one could actually really say this is what you need to do. So a lot of mortgage brokers out there were left to their own devices to try and interpret what the rules mean, when, let's face it, none of us have time to read hundreds and hundreds and hundreds of pages of guidance, which makes no sense whatsoever. So this is something that I came up with, and quite simply, again, I should be called Mr. Copy and Paste, to be honest with you, because all I did was to copy and paste this from information that was sent out by 4 lenders. So I combined what I thought were the best parts. I think it's about a 12-page document, but it just tells you what to do if you do get a vulnerable customer. So again, all you need to do, just type VC into the box. Quite often, I'm being honest, we send these out to everybody in the show anyway, just so you've got a copy of it. And then what you can also do, so we've done an example there, just you can put your names down, sign it, get your staff to sign it if you've got staff, and then date it. And again, you proof that you've done something. So if you get a surprise visit from somebody, then you can actually show, yes, I have done something on vulnerable customers. And on to consumer duty, I'm not talking about, I did used to talk about it quite a bit last year, but I'm not going to talk about it anymore because there's not really any point, because you can watch it on catch up. Because last year we had this gentleman who's the chief executive of the Association of Mortgage Intermediaries, Robert Sinclair, did two 60-minute presentations on Consumer Duty. One was pre-Consumer Duty, one was post-Consumer Duty. Our most popular events ever that we've ever done, because people were so worried about what's going on. And of course, it's ongoing as well. It didn't end last year. That's just the start of it. This is going to be ongoing. And well, we've all got our own views on it, but I think probably you all know my views, if you've seen my shows before. Just to me, well. But you can watch this on specialisthub.co.uk. Just go onto the site and click on Sutton and the Specialist, and it will come up as ones you can watch. I think they come up on YouTube. And of course, as I'm going to say in a minute, you do get CPD. These are the other ones we did last year. We did, I think, two with Roger, one with Tuscan, I've forgotten their names, and one with Family Building Society. So again, they're all available on Catch Up. And remember, you will always receive CPD for every show you watch, even though you're watching it on YouTube, because we get notified and we can then get the CPD certificate out to you. A little bit also today, we do have a prize draw giveaway. As we do every month now, which is a £100 Amazon gift voucher, which will be a number will be pulled. Everyone that's actually watches today's show, not someone who comes on for 5 minutes towards the end, but everyone who watches today's show will be entered into a sort of virtual draw as sorts, where a number will be picked out or will be chosen by Gary from Castle Trust, and that number will correspond to one of you, and you'll win your £100, which then Castle Trust will send you. One last thing, so I'm losing my voice. I haven't spoken too much the last couple of days. If you're one of the 11% of FCA authorised brokers are thinking of surrendering their permissions because you've just had enough, believe me, I speak to a lot of people who really have had enough who've been doing this a long time. I've spoken to people who've been doing this 40, 50 years, and I've just got to the stage where they've gone, do you know what? This just isn't worth it anymore, for all the aggravation, all the compliance I'm going through to do the job that I've done successfully and really, really well for all these years. I'm spending more time on compliance now than I am on advising my clients. And I understand that completely, because compliance is now a huge part of what I have to do, and is, to be honest with you, a lot of it is just a box ticking exercise with what we have to do, and it really does get on my nerves more than anything else. But I'm not about to give this up because I don't know anything else, and I'm not ready to retire yet. So if you are one of the 11% who are thinking of leaving, give me a call, because we've got some options. We've now got about 20 brokers who are in the process of retiring or have retired, and are getting us to help them with their clients as and when they come through. One of them's earning more money than he did when he was actually fully working, fully employed and authorised by the FCA. So he's a very happy man. Okay, so the presentations are about to start. I've already gained 2 minutes. So we've got 2 minutes that we weren't expecting. First one's set to start. I'm hoping that the first person is not in the room yet, which is, yes, he is. Great. Okay, so he's about to come into the room. So bear with us 1 second. We'll just switch over the slides. And there he comes. And there's a picture of him in real life. And there's a picture of him with a professional mugshot. We can hear you, Gary. We can see you. All good.
Lucky for some.
You okay?
I'm very well, thank you. Probably faring a little bit better than you, but I hope you're all well on the road to recovery.
Thank you very much. I won't explain too much because no one wants to hear about my medical ailments, but I'm not doing too bad. I've had a scary couple of days, unfortunately. So one reason I'm having to work from home because I'm not allowed to drive for a week. But I'm here, which is good. So everyone, you should have received this morning, which is Castle Trust Bridging Product Guide. Those of you that haven't heard of Castle Trust, been around a long time, were always been heavily in the bridging space. I've been involved in the buy-to-let space, which has just come back, actually. I've just issued some terms recently. And a big part of what we do, and we are a big supporter of Castle Trust because the staff, quite frankly, are excellent, which always helps when you're dealing with a lender, that you're dealing with staff who know what they're doing. A little bit on Gary, first of all. Gary has predominantly operated in the finance sector throughout his career to date. Before joining Castle Trust, he worked as a business manager in a BMW dealership for 8 years. He is now Castle Trust Business Development Manager and has been with them for over 2 years. Unfortunately, Gary is a Manchester United season ticket holder, although having 2 young daughters has impacted his attendance, which might explain the next slide, which is, as a youngster, Gary once ran onto the pitch at Selhurst Park, Crystal Palace versus Man United and kicked the ball back to Peter Schmeichel. He wasn't happy then, but then was he ever? The crowd started chanting, sign him on, but they didn't, and here we are. You probably find the reason he doesn't go much to Old Trafford these days is he's banned. That's probably the reason why. But there you go. So did you actually, was it in play, or did you do...
So it's just a bit of background. It was the last game of the season in about 1993. I think we just won the league. All of the crowd were expecting, for some reason, the trophy to come out. So we're itching onto the pitch. The ball goes over the byline, and my dad, God bless him, just gave me a nudge. So all of a sudden, I was on the pitch.
There you go. I'm surprised you weren't chucked out. Anyway, we just actually had someone's asked a question just regarding the deal. We'll come back to that if we may, because we'll come back to it in a little while. Might actually come back to that on the second speaker. Sorry, I can't see. Well, my sight's awful. Is it Ujwal? We'll come back to that in a little while, so please bear with me. I won't answer that question just yet. Gary, it's over to you. I'm going to go and put on a jumper because it's freezing in this office because the heating's not come on properly yet. So I'll see you in about 20 minutes.
Lovely. Thank you very much, Tony. And good morning, everyone. Thank you very much, obviously, for joining us. As Tony mentioned, I'm just going to take a few moments to give you the rundown of our bridging proposition and portfolio of products that we have at Castle Trust Bank. We have probably February last year, we really did pivot internally to decide that we wanted to establish ourselves as a genuine bridging lender and be known as a bridging lender and be on the radar for you all as a genuine option in the bridging space for your clients. We did win Best Bridging Newcomer Lender at the B&C Awards last year, and despite not sponsoring the awards in any way, shape or form. So we're very pleased with that, and hopefully just gives a reflection as to where we are going and what we're trying to achieve and the successes that we're winning there. So obviously Castle Trust, the bridging specialists, and obviously myself, Gary Maher, the BDM, looking after Specialist Hub. So what I want to achieve today is just to create an understanding for you all of where Castle Trust sits in the bridging marketplace. To obviously highlight some key hotspots in our proposition of where we're seeing success currently. And just to make sure, as I said, I want Castle Trust to be in your mind as a genuine option and on your radar as a genuine option for your clients, for obviously to take advantage of the excellent portfolio of bridging products that we currently have. So first of all, just a bit of background. The Castle Trust is wanting to highlight the areas and the types of client that we would lend to. So we do lend to, and we have always historically sort of hung our hat on this, foreign nationals and expats will always be considered. First-time landlords will be considered. Limited companies based in the UK and abroad would be considered. And first-time buyers. So we can consider first-time buyers as long as they're buying in a limited company and are UK-based. We can consider a first-time buyer. We don't have a minimum income requirement as a lender. What we do need to see is evidence that there is an income. So that is satisfaction to us enough. We don't need to see necessarily upfront bank statements, etc. As long as we can be comfortable that there is an income. So we don't have that minimum income requirement. So as bridging specialists and the part of our portfolio, we have a range of products which obviously we'll touch on in a bit more depth as we work through the presentation here. But some key points. So we are able to lend 80% net to the client on light and heavy refurbishments. Now that is not 80%, and you think you're going to get 80%, but actually the client comes away with 75 or 74, 73. The client will take away, as long as it fits within the boundaries of the product, the client will take home 80% net LTV. Interest and fees will be on top of that. So I can't stress enough, it is 80% net. 75% net LTV we can offer if we have a heavy refurbishment where planning isn't quite yet in place. We may be expecting planning to be in place, but it's not going to be in place before completion. So we can pivot and limit a lend to 75%, and I'll touch on it in a bit more detail with the product that involves and how it works. We are able to offer 100% drawdowns to cover the cost of works on heavy refurbishment now. We don't have any arrangement fee or admin fee on these drawdowns. So loan sizes from 200,000 up to 5 million. Within the portfolio, the majority of our products are rolled up interest, but we do have a service bridge as well, which I'll touch on in a second. Terms between 6 and 18 months. Importantly, with bridging, obviously speed is often of the essence. So we do underwrite day one when a case comes into us. So we look to issue a loan illustration document, or if possible, certainly our standard bridge and our light refurbishment bridges, we'll look to issue an offer as quickly as we can, subject to valuation. So we are geared up that we want to, at the soonest opportunity, give you comfort that we've assessed the client and we're comfortable with them, and obviously can move on. And then it's just we need to worry, probably the wrong word, but the valuation of the security is then the agenda. To tie in with that speed, we look to utilise title insurance wherever possible. And what we do ask for when cases come into us is for all applicants, ID, proof of address, and then if it is a refurbishment lender, we're looking at a schedule of works. That gives the underwriters the bulk of what they would need up front to be able to get that swift either issuing of a loan illustration document or to go straight to offer. So we're looking at the portfolio of products just in isolation here. So the original product we had is just our standard bridge product. So this is rolled interest. It's for the primary uses that we see, obviously development exit or auction purchases where speed is of the essence. What we have here is a product where we can lend up to 75% gross day one. This is including fees and rolled interest. So essentially what the client is going to come away with is something around 67% net on the product. Terms are anything between 6 and 12 months. This is rolled interest with no early redemption charge. There is a minimum interest charge of 3 months, but there is no ERC. As mentioned, loans would be between 200,000 and up to 5 million, subject to bespoke pricing. Now, in my experience, if we've got a lend over 5 million, what's the pricing going to look like? Usually, and again, speaking from experience, it would be at 0.85% per month. It's just a question of obviously gaining comfort with the security and obviously the background of the bigger picture of the lend. So primarily this product, development exit, where you've got a developer not sure what they want to do with the units. They might want to sell some, they want to keep some, they haven't made a decision. We can use this product and its flexibility to allow the developer to come off their current development finance, get that paid off, and give a flexible facility where they are able to sell some units and pay down the lend without any ERC, and then look to obviously exit via, if whatever they have left in terms of units, exit via a term product from there. So it's just a flexible option, and obviously the auction purchase is all about speed. So it'll be a case study in there with a limited company with experienced developer clients, 14 self-contained units in Norfolk. It's also worth pointing out here that with multi-unit blocks, we are able to lend up to for 20 units on aggregate value. So that's well worth, it's again something that we'd like to highlight. It's a bit of a USP for ourselves, that we're able to use that valuation format as long as the unit sizes are, we need an average of 35 square metres and can go down as low as 30 square metres. But aggregate value would be the valuation format that would be our preference, up to 20 units on multi-unit blocks. But the purchase price is 1.4 million. We're able to lend 75% gross. So as I said, that's including rolled interest and any fees, with rental income there of 116,000 per annum. So we do stress we need to, when underwriting our bridging cases, we do need to underwrite and evidence that there is a term exit, that a term exit would work. So as long as we're able to do that, the client is able to still exit via sale if they want to, but as long as we're able to evidence that a term exit would work, then that is completely satisfactory for us. So we will always ask for what is the, if there are works or not, we'll ask what either the current rental income or post-works rental income is. We evidence this by looking at in 12 months time or whatever, just the example of a 12-month term with all of the rolled interest, what's the total debt position, and we would stress that exit on a pay rate of 5.5% at the appropriate ICR. As long as the rental works there, then we've ticked that box and evidence that a term exit works from from a moral point of view. Then that's that as a lender we feel that is the best way to work and to treat borrowers, knowing that there is a viable exit there somewhere in the market. So that's across the board on our bridging proposition. But yes, standard bridge does what it says on the tin: 75% gross, 67-ish% net. There for your development exits or your auction purchases. So that leads us on to what has until recently been the jewel in our crown. So these are our sort of heavy our refurbishment bridges. So we have a light refurbishment option and a heavy refurbishment option. So just wanted to highlight what do we deem light refurbishment. So it's any works that fall under permitted development. So if no planning permission is required for those works, then we're looking at light refurbishment. So typically, the typical case is like resi to HMO conversion, up to 6 tenants. You're changing the kitchen, the bathroom, decorating, just, for want of a better term, tarting the security up to make it better, and then away we go. Internal reconfiguration as well is often falls into that bracket. Heavy refurbishment would be anything that is requiring planning. So be that change of use, planning permission, just a standard planning permission requirement. If we're in an Article 4 area with a HMO, the need for the C4 planning in advance, because there are no permitted development options in those areas, that would deem it heavy. Another example is also listed buildings. Any sort of listed buildings consent that is required would fall into the bucket of a planning requirement, so therefore fits onto heavy. But typically, we're seeing conversions from houses into flats or the reverse. This is the ideal scenario where we lend on residential properties as a whole, but this is the scenario where we can lend on a commercial property. So if we have a commercial property which has change of use and planning all in place to convert to resi, this would fit on the heavy refurbishment product. Obviously, any structural works requiring planning would deem as heavy. So it's very much, is planning required? Yes. Heavy, no, light. It's simple as that. We don't want to overcomplicate things into where your client's case would fit. So the light refurbishment bridge rate 0.85% per month across all LTVs. So we can do up to 80% net day one. At the back end, we need to be within 75% LTGDV. Terms between 6 and up to 12 months, all with rolled interest. So rolled interest at 0.85% per month. There's no ERC, just with that minimum interest payment, interest charge of 3 months. Again, loans over 5 million would be subject to bespoke pricing. Now, this is a common thread throughout all of our bridging products, that no ERC, minimum interest payment of 3 months. So this typically is where we do the most typical case we'd see here is you've got a client who's found a 3-bed mid-terrace. It's right to be developed into a 6-bed HMO outside of an Article 4 area. Can be done under permitted development. Thank you very much. That's sort of the most common scenario that we would see, one that we're very comfortable that that product works extremely well with that scenario. So we did a case study here. We had a property, a detached property in Devon, in need of a full refurb, new kitchen, bathroom, etc., and a general tidy up. Purchased for 260,000. We're able to lend a 212,680, with the 80% net. We fitted at the back end within the GDV, so within 75% of that, including all of the rolled interest. This was a holiday let product. So with holiday lets, we do lend on holiday let income. So obviously that is often, when compared to a standard AST, is considerably higher. And that's what would be the income and the monthly income as a result that we would use to stress the exit at the appropriate ICR. Another, obviously, this is one that I touched on before, just we had a look at the previous case study. 5-bed mid-terrace in West London to be converted into a 6-bed HMO. So it required just internal reconfiguration, but everything importantly under permitted development and no planning required. So the purchase price was 1.83 million. We're able to lend 80% net day one, so the client takes away 80% towards the purchase of the property. And obviously the rental there, post-works rental, is what we would use to assess that exit. The heavy refurb bridge, so its sister product, structurally is the same. However, there is a slightly higher rate. So this is priced at 0.95% per month across all LTVs. Now, there are two sort of avenues we can go down here. So with heavy refurbishment, obviously, there is the works require planning. So if planning is in place day one, we can lend up to 80% net, we within 75% LT GDV, and we're good to go. Everyone's happy, and we can get moving on it. If planning isn't expected to be in place before completion, but we do expect it in, so we can see evidence that the appropriate papers have been lodged, etc., and everyone is comfortable that the planning will be in place in there, what we can do is we can limit the lend to 75% net day one. What we would do then is insist on an 18-month term with a 6-month period that the planning would need to be obtained. So this is very much on everyone is comfortable that planning, the process has already started and planning is going to be obtained. As long as everyone is comfortable with that, we can pivot to the 75% net lend, 18 months, with that caveat that planning needs to be obtained within the first 6 months. So this, again, refurbishment requiring planning, and heavier schemes of work and refurbishments would obviously fit in here. What we have historically, when we first came out with our refurbishment products, we're often asked, okay, you can help us with the purchase, 80% net is fantastic. Can you assist us with the works? So historically, that has always been, no, we can't, we don't have a product for it. We do now. So we have our exclusive heavy refurb with drawdowns. So it's very similar in structure to the heavy refurbishment product that we just talked about. The main difference is that we are offering up to £1 million worth of drawdowns to cover the cost of the works over a maximum of 5 drawdowns. Now, there are, just in regards to the key points, this is priced at 0.99% per month across all LTVs. The maximum day one lend we can do is 75% net here. Planning must be in place on this product. We can lend up to £1 million of drawdowns, we said, towards the works, but we must be within 70% LT GDV. So you can see, obviously, there's a slight 5% reduction in where we need to be comfortable at the back end, meaning that we are aiming at the larger developments and larger projects that would obviously fit comfortably here. 18-month term, we can look at a shorter term at request, but the standard is 18 months. Rolled interest, But the minimum loan size here, minimum day one lend, is £250,000. So slight increase from the £200,000 on the other products. But here we're seeing an awful lot of traction, as you can imagine. Even this is obviously based at heavy refurb, but if you have a permitted development case where we wouldn't necessarily deem it heavy, but the client wants to take advantage of the drawdowns that this product offers, then we could make it fit on here as well. So we're seeing a lot of uptake in terms of take advantage of those drawdowns. As I said, it's the first product that we've had that we've been able to come back and say, yes, we can help you with the cost of the works as well. So keep it all encompassed, 75% net for the purchase, and we're going to do the works for you as well. Typically, conversion of houses to flats or flats to houses, HMO conversions, and like your more larger scale refurbishments would fit on the product. So a couple of case studies here. 1 bed flat in Notting Hill being converted into a 2 bed, purchased for 1.375. We were able to lend 75% net on day one for the client, and provide £200,000 worth of works. So on the regards to drawdowns, our minimum drawdown size is £50,000. So depending on the client, they are paid in arrears. So this could be in 4 tranches of 50,000, entirely up to the client, and we're obviously comfortable and flexible to be able to do with what works best for them. But it's important to note that the minimum drawdown amount is 50,000. See rentals and whatnot. Previous rental, the works done today obviously led to an increase in rental, and that is what we would stress that exit on as well. The latest addition to our portfolio of bridging products is our new service bridge product, which we have named Bridge the Gap. We are keen to get feedback, as much feedback as we possibly can regarding our proposition. So it is why we are often making slight tweaks to the proposition to make sure that it is still ticking the boxes, and that is based on feedback obviously from brokers. But there are a couple of areas or a couple of buckets that maybe you'd put some client profiles into, which we feel that this would be a viable option for. So the service bridge, or bridge the gap, as we are calling it, is a 12-month service bridge. It's charged at 0.52% per month. So that is annually, if you're comparing it to a term loan, it's 6.24% as an APR. Minimum loan 200,000 up to a maximum loan again of 5 million. So that's standard for our other bridging products. This is the only serviced product that we have, service bridge product that we have. We have the arrangement fee on there is 5.5%. We can do a max loan is 75% gross. Now, because we are not rolling the interest here, we're going from on our standard service, our standard bridge, the client's going to take away around 67% net at the maximum lend. On this product, it's looking at a more 71, nearly 72% net that the client would take out. So as I mentioned, the purpose of this lend was there's a few areas or buckets that we would group clients in, or client scenario in, that we feel it could benefit from. So the first one would be maybe your first time developer, so just completed their first development. Obviously they may then be keen to move on to the next one, and there is a need to obviously refinance to recoup their costs and move on to the next project. But as a first time developer, when it comes to we're looking at that term exit, and obviously being asked to commit for 2, 3 or 5 years, without a history, a bookings history or lettings history, the options available to them in the buy-to-let market can be quite restricted. So what this the bridge will do is obviously replenish the funds to move on to the next project swiftly, but it allows them to use this 12 months to build up 12 months worth of rental history or bookings history, To, once we've done that, look at exiting into the wider market where, touch wood, hopefully rates are a bit more palatable in 12 months' time. And then obviously open up the options in terms of lenders with that sort of certain bank, building societies, etc. Without that lettings history behind you, they're not really going to be interested. But we've been able to build that up. Then obviously it puts the client in a better, stronger position in terms of options available to them when they come to exit. There's no ERC here, so the client can exit whenever they like. So that minimum interest payment as well. So first-time developers or any developer where they're looking to recoup their costs quickly and move on to the next project, we feel that this would be an option for them. Also, you've got your client who's coming to the end of their fixed term, reluctant to commit to a 2, 3 or 5 year lend based on current rates that are available. There's an opportunity to take advantage of this product, to park their borrowing for 12 months, etc. 12 months as a maximum, and then look to obviously term out when potentially rates are a bit more palatable as well. So what we say is its product is not going to be a blanket, it's for everyone, but there are key scenarios where we feel it can be beneficial to certain clients and borrowers based upon their circumstances. So a case study here, we've made this work. Limited company, it's a 5-bed detached farmhouse with its acreage to be used as a holiday let. Obviously, with regards to rental with holiday lets, we do lend based on holiday let income. So we were able to lend off a much higher value, 152,000 compared to 48,000 on an AST. So we completed the initial purchase transaction and refurbishment with an 80% net refurbishment bridge lend, and then we were able to remortgage it onto our service bridge, so the client can then build up that history, gain their track record, and then look to exit in a stronger position once they have achieved that. So who do we have? Obviously, an important thing from any lender would be the solicitors that we use and have on panel. So we have 3 solicitors on panel, them being Paris Smith, Brightstone Law, and Lightfoot's. We can look to utilise a dual rep option with Paris Smith, but other than that, it would be a standard sole rep option via Brightstone and Lightfoot's. So a bit of a whistle-stop tour, and Tony's just appeared again there, so I think maybe my timings are spot on.
10 minutes ago.
I've got how long to go, sorry?
10 minutes ago.
Oh, 10 minutes? Oh, blind me, I do apologise. But yeah, so that is the whistle-stop tour of our bridging portfolio, but happy to answer any queries that you may have.
Okay, right. Chelsea has asked, how many directors for a limited company application?
Up to 4 would be the max that we would put on there. Obviously, with a director, dependent on shareholding. So if the director has anyone with over 20% shareholding, we would want to be named on the documentation along with any director. But 4 would be the maximum that would be named on there. If a director was a majority shareholder, we wouldn't, and obviously the other shareholders were below 20%. We wouldn't expect them to be named on the documentation, but would probably ask for a what's the word I'm looking for? Minimal or low shareholder waiver form. That'd be obviously taken care of at legals. But 4 would be the maximum that we would ask to attach to any documentation.
Okay, and just to add to that, no limits on shareholders either. So we did one a couple of years ago. There was 18 shareholders, which was the husband, wife, and 16 children. Obviously, someone didn't have a telly, and the wife had already passed away. So there was 17 of them. We only actually had 2 on the documentation because the other 15 were minority shareholders. So next question is from Maz, who said, sorry, Gary, did you say the minimum loan is 200,000?
Yes, so across the majority of the proposition, £200,000 is the minimum lend. The only difference there, one that stands out slightly different, is a heavy refurb with drawdowns product where the minimum day one lend is £250,000.
Okay. Do excuse me because it's the light's so bad in here. I can't. I think Sarita. Sorry, looked like Santa when I first read it. Sarita, would you remortgage a bridge from another lender, which is also a bridge that's about to expire?
Yeah, we'd look at that in not in isolation, but we'd certainly consider it on its merits. So yes, that would not something that we would there'd be a firm no. So we'd certainly consider that.
Okay. Jenny has asked, will you take a holiday let property as security?
On a bridge, yes, we would, if works were being carried out to it. So on a refurbishment basis, yes.
Okay. You gone, sorry?
Sorry, I was going to, I'd answer my question. Sorry,
right.
and then
okay.
I was going to do more.
Paul was asked, commercial purchase for applicant with no experience.
So we are residential only. So the only scenario we can lend on a commercial property is if there is planning permission and change of use in place before completion. So if it's to remain commercial, then it's not for us.
Okay, and that would also probably answer the question from earlier on from Ujwal, which was about a semi-commercial query. Client is looking to purchase mixed-use building with ground floor retail office space and first floor self-contained flat or masonette, along with storage area and shower room. There is planning to convert into 4 flats, sale price under 400,000. So that would obviously be something that's acceptable as semi-commercial with planning to convert into residential. So well, there you go. You got not only have you got a lender that will do that, but also a lender whose terms is unrivaled when it comes to this type of situation. So the client can raise a lot more money. So that's one maybe speak to my team on that one once today's over, and they can go through some figures. We can actually get you some quotes over because all the Castle Trust products are on our internal quoting systems. There are more questions because one's just cropped up. Ben, 1 second, I need to scan down. Are there any restrictions on the type of security?
Residential only, C3 and above. And as I mentioned, with regards to commercial, we can lend on commercial as long as it has change of use and the appropriate planning in place before completion.
Okay, and Stephen said, can you do a second charge bridge on a multi-unit block? Stephen, it's first charge only, unless there's something I don't know about. So
you would know, Tony, but so there is first charge only.
I've been out the loop for 2 days. Things can change massively in our industry. I've probably got about 300 lenders have changed their rates in the 2 days I've been out. So, and that I think is it for the questions. Gary, thank you very much as always.
My pleasure.
Always much appreciated, everything you do for us. I say Gary's one of the reasons we've got such a great relationship with Castle Trust between him and the directors. It really is. It's a working relationship that works so well. That's one reason we can give them so much business and complete so much business with them as well. So, and we are. If you're thinking, okay, I can go direct, believe me, you won't get anywhere near as much through as if you did try, well, as if you went through us. And also, it's a fairly restricted panel as well because there's only so many brokers they can service. So they would normally refer you back to us, just so you're aware, because the products are that good. As you can imagine, they are very, very popular. I'm hoping now that this will work for me. Yeah, it does. That just worked. Gary, thank you. Don't let Simon. We'll take you out of the room. Don't close it down yourself.
No worries.
Otherwise, carnage will ensue.
Thank you all.
See you soon, mate. Cheers. Thank you. Okay, we've gone a little bit over time on that one, only by about 3 or 4 minutes. So our next speaker's already in the room, and so I will crack on because he's about to appear any second now. Lee Williams from Shawbrook Bank, very good snooker player.
Morning, Tony.
Morning, everyone. How are you doing? All right?
Yeah, good. Thank you. Can you hear me? Okay.
Yeah, all good. Yeah,
good.
I'm on the road to recovery. So. Okay, so you should have received this today, product guide from Shawbrook Bank. We all know who Shawbrook are. I do believe we were broker number 3 or 4, all the way back in 2011 when it was Wade Laidlaw Bank that then became Shawbrook. So we've been with them a long time, know them incredibly well. Lee's one of the most proactive I don't want to call him a business development manager. I think he's now national sales manager. He's doing all right, but he's very proactive, very good at what he does, and does know his stuff. So don't forget the questions. Think of any questions whilst Lee's presenting. He's going to talk about their products in a moment, which are absolutely excellent. I've really got to say, it's not often I get involved in cases, but the ones I have done recently where Shawbrook have been involved, it's like a wow moment. I'm like, why doesn't every lender do this? Okay, so Lee Williams, National Relationship Manager. Sorry, I called you National Sales Manager. National Relationship Manager for Shawbrook, covering East Anglia and Essex. He's been with Shawbrook for 6 years, and prior to that has 30 years' experience in financial services, predominantly with high street banks. Lee looks after 115 brokers in his region. Wow. Helping with regulated and unregulated bridging, buy-to-let, and commercial and semi-commercial investment mortgages. His speciality is working with brokers to shape large loans to present to their complex deal forum for early stage board approval. Lee is a keen golfer, trying and mostly failing, welcome to my world, to improve his handicap. My handicap is my golf clubs and my swing and everything else that is involved in golf. He also supports Liverpool FC. It's unfortunate. His claim to fame. I saw this last night and I thought this has got so many potential stories behind it. I doubt very much whether Lee actually just wanders around his village or town dressed as a 1920s gangster with a fake gun or something. But once in a snowstorm, Lee had to try and flag down a lift dressed as a 1920s gangster. A very quick explanation, Lee, please, if you would.
Yeah. So we had a Christmas do, which is fancy dress themed. Driving back from it, snowstorm, skidded into a roundabout and broke the front suspension, so kind of limped around the corner. It was about 1 o'clock in the morning in the middle of Norfolk with no traffic and nobody around. So I was there for about 2 or 3 hours in freezing cold, dressed in a fancy dress outfit, looking a bit shifty as a gangster. And a little old couple eventually drove up and stopped and kindly gave me a lift back because they lived in the same village. But yeah, I thought I was there till the morning. Really, it was not a good time.
Can see the headlines. Elderly couple held up carjacked at gunpoint during snowstorm. Police seek someone dressed as a 1920s gangster. I did once actually. I was going to a fancy dress and got out to get some cash out of a cash point. I was dressed as a Smurf with blue face paint the lot. And the amount of people that were bibbing me as I was at the cash point, which wasn't working properly, was quite an embarrassing moment. I should probably add that to my claim to shame that I probably do fairly soon. There is a picture somewhere. Lee, over to you. I will see you in about 20 minutes.
Okay.
Some questions, please, everyone.
Thank you very much. Thank you, everybody. It's a pleasure to be here again. Just a little bit about Shawbrook for those of you who may not have heard of us before. So we're a specialist UK lending and savings bank. So what does that mean? Well, we take in deposits from our consumer customers and lend out along several lines, including development finance, traditional business finance, and the area I look after, which is property finance, so bridging, buy-to-let, semi-commercial and commercial investment. So we've been around since 2011 and significantly grown the business since then. And we're a bank designed to accommodate the dynamics of a modern world. So very much a blend between digital processing for speed and efficiency, but never taking away the sort of experience of having a human actually look at each application and support the deals that should be supported. So we're definitely not a bank that just puts it into a computer and computer says yes or no. We help deliver clients' visions by providing practical and creative solutions. And since 2011, we've exceeded our property-related loan book has exceeded £8.5 billion. So we pride ourselves on our technology, and we spent a lot of money over the last couple of years developing our application portal, which I know the Specialist Hub are keen fans of, and it's really, really efficient. I'll come on to it in a few slides' time. But basically, it helps with all applications through buy-to-let, bridging, commercial and development finance. And we only work with intermediaries such as Tony and his team because we value the relationship the broker partners have with their clients and their whole of market view, rather than just Shawbrook's. We've won awards over the years for our proposition. So here are some of the more recent ones. And as I said, we have got a game-changing application journey. And I know you guys on the call won't be involved in submitting the applications, but just to give you a flavour of how easy it is for the team to submit applications. The application portal now covers our buy-to-let, bridging and commercial applications. It provides a maximum loan calculator. So once you've keyed in minimal information, it will tell you based on the rental income, based on the AVMs, if we can use them, what the maximum loan we could lend is. And all things being well, we can then provide instant heads of terms or indicative mortgage offers that tell you, subject to valuation and providing the conditions that they outline in the offer, we're happy to lend. It's fully integrated with some third parties such as Experian and Companies House. So if you put in a limited company name, it will pull through all the details of the directors and shareholders without the operator having to key in everything manually. And then with Home Track, you just put in the address of the property we're lending against, and it will pull through all the information from Land Registry about the property, so you don't have to manually key in all of that. And wherever possible, we use AVMs to save costs and obviously speed up the process, which again I'll come on to in a few slides' time. We're also one of the few UK lenders that have adopted PEXA, which is an Australian conveyancing tool which is available at the moment for individual and limited company applications, where it's an external refinance of debt. What it does, it basically, rather than go through the solicitor process of going from one solicitor to the other to the lender, it's all done on this platform, and it's basically, when ready to complete, one push of the button and the completion happens. So this enables much faster completions, improved communication between all the parties, a fast, streamlined journey, and a reduced risk of fraud and cyber attacks. And it's very transparent. So we're very proud to be involved with that at a really early stage. Here's a case study of a case that we completed using PEXA recently. So it was an 85k loan, so it wasn't the biggest loan, but it was a refinance and a capital raise. And it was a 10-month interest-only loan fixed for 5 years. It's actually 10-year interest only, sorry, fixed for 5 years. We managed to go from application to completion in just 37 hours. You may have seen this case study on LinkedIn. So the case was submitted on a Wednesday via the portal. 4 hours later, we were able to issue the formal offer. On the next day, we were able to instruct our solicitors. And on the Tuesday, we completed the deal using the PEXA technology. So lightning quick, and there's nothing like that in terms of speed in the industry. So definitely one of our USPs at the moment. I'm going to give a bit of a market update. I would caveat that I'm by no means an economist, but just some data that's interesting that sort of explains what the view is in terms of 2024. So in terms of swap rates, so for those of you who might not be overly familiar, swap rates reflect the market's expectations of the future direction of central bank interest rates, and they're based on the assumptions surrounding what interest rates are expected to be over the term of the swap rate. These assumptions consider factors like inflation, prices of food, fuel, and the general economy, which will feed into the forecasts. So the volatility that you can see there since the Bank of England started increasing the base rate, and the movement in swaps became very volatile following the mini budget that we're all aware of in September 22, and jumped significantly throughout 2023 as a result of soaring inflation and also base rate. Swap rates have stabilised at around about 3.5% to 4% since December, and I think this morning when I looked, they were hovering around 3.9. So they're kind of stabilised at that point at the moment, with a few fluctuations, dependent on any good or bad news in the market. Consumer Price Index. So this, sorry, just 1 second. UK Price Consumer Index has fallen from the record high in 2023, but again has held stubborn around about 4% since. And headwinds that can influence this is fuel prices, electricity, supply chain disruptions such as the geopolitical circumstances, labour market tightness, increased spending, rise in rents and wages. The message really here, the market's improved, but it's expected to continue the same in terms of base rate during 2024. It's still a buyer's market, so we're seeing, you can see there that the rest of the UK and London sales agreed are more than 10% below the asking price. So that indicates that there's more competition in terms of people looking to buy houses than there are homes on the market. So sorry, let me say that again. So higher interest rates on mortgages make it harder for people to buy a home, which reduces the demand. So at the same time, there might be more homes on the market than in recent years. These factors create a buyer's market when the buyers have more choice. So sellers are under pressure to price a bit more competitively in order to sell. So buyer demand is sitting 12% higher than a year ago, but still 13% below the 5-year average. All housing market measures are improved compared to last year when the UK first felt the impact of higher mortgage rates. So there's 13% more sales and 14% more homes coming onto the market and 22% more homes for sale at the moment. So professional landlords are moving with the times. So if you look at the data here, 79% of landlords have added to their portfolio in the last 6 months, 25% looking to add to their portfolio in the next year, and 20% looking to invest in multiple properties, and 21% have sold properties in the last 6 months to invest in better properties. In terms of yields, this is a bit of a busy slide, but you can see the average rental yields by region over since 2014, and you can see for 2023 they're starting to increase again, so rents are going up. And then in terms of demand, you can see that rental demand is outstripping supply again, so there's not enough houses to rent, so that's causing rents to go up. So tenant demand, 72% of landlords have experienced rise in tenant demand. 33% have said that there's an increase in demand from tenants over the last year. And 70% of landlords are optimistic about the year ahead. So a bullish opinion from most landlords. In terms of sales marketing, demand is up 12% in the first 3 weeks of January. 13% sales agreed increase, 14% increase in supply, and 22% in overall stocks, which is good to see. So I'm going to move on to talk about buy-to-let and commercial. So why do Specialist Hub work with us on buy-to-let mortgages? So I've already mentioned the frictionless digital journey with us through our portal and with PEXA. But we're able to consider large loans up to £25 million with kind of creative funding solutions, and really using myself and the regional development managers to help shape deals that perhaps don't necessarily tick all the boxes, but are good deals that we perhaps should be looking to support. We have a complex deal forum that we can present deals to at a really early stage to see whether people such as risk and group credit at second line would have appetite to do the deals, rather than submit all the applications in and get valuations and then find out we don't like it. We have very simple lending criteria, which is available on our website for everybody to see, so it's very transparent. But again, as I say, the criteria is that, but we can look at deals perhaps that don't meet that criteria to see if we can garnish some support to lend. We can lend on a yield-based approach, such as on HMOs. And that's probably one of the most regularly asked questions, is how do we value HMOs? Well, if the valuer says that the most appropriate method based on demand for HMOs in the area and comparable sales, then if they view that yield-based is the correct method to value it, then we can consider that. And we also have an energy efficient discount on buy-to-let. So if a client has got an energy rating of between A and C, then they'll receive from 0.25% discount up to 0.6% discount off of their arrangement fee, which we think is a nice incentive to help landlords consider improving their stock. In terms of our products, we have a limited edition product which starts at 5.69%, which attracts a slightly higher arrangement fee at 5%. We have the digital product, which I mentioned, which is the example where it completes in next to no time. The rates there is 5.99% on a 5-year fixed. And we've also got a complex buy-to-let product for those assets that don't pass AVM, where there's a more complex asset or a more complex ownership structure. And rates on that product start at 6.59% with a 3% fee. So these are some scenarios that we can consider. So as I say, we can do the very simple by single-let residential houses and flats, but we can also look at the more complex assets which you may struggle to place in some lenders' appetite. So we can look at flats above commercial properties. We can look at portfolios containing a mix of residential and commercial properties. We can look at a multi-unit block of flats, and we don't have any limit on the number of flats in the block. We can look at purpose-built student accommodation. I think we've got a case study coming up, which was a 96-unit purpose-built student accommodation we did up in Durham. And we can do houses in multiple occupancy. Again, no limit on the number of rooms in the asset. And some lenders would have a restriction there of maybe 5 or 10 rooms, or six or 10 rooms in their appetite. But yeah, we're not restricted by that. This is a case study. So this was a £319,000 loan for a refinance, 5-year fixed and 75% loan to value. Again, this is another digital buy-to-let case which completed in just 6 days for one of our professional landlords. Client required a property refinance with a cap raise to buy another property for a house in South London. Needed to act quickly, and through our Shawbrook, my Shawbrook portal, we could get the formal offer out within 48 hours so they didn't lose the property. There's another case study. So this is £20 million, a slightly bigger loan, and the maximum loan size is 25 million with us. But this was 20 million refinance and capital raise on a 36 property portfolio. Capital raise was £1 million for further investments and refurbs. We got the senior regional development manager involved as well, working with the senior underwriter. And we managed to get credit approval before we'd got the valuations instructed, so that the client had the surety to know that we were happy to lend subject to the valuations all being okay. Another case study on buy-to-let. So this is 150,000 refi cap raise, and this was an 11 property portfolio refinance. Again, delivered the funding at speed using the My Shawbrook portal. They used the capital raise to renovate some of their other properties in their portfolio, and also to improve their energy efficiency, meaning that they also then benefited from the discounted arrangement fee. That's buy-to-let. Moving on to commercial investment. Again, why do Specialist Hub work with us? Across all of our products, we have a standard requirement of only 25% personal guarantees, and we also don't take debentures on limited company lending, which is it's quite surprising how many times that particular piece of criteria wins deals from other lenders that would want to insist on 100% personal guarantees and also take a debenture over the limited company's assets as well. Again, we can use our My Shawbrook portal, so you can get a very quick decision and an indicative mortgage offer. We can lend on interest only up to 75% on our semi-commercial product, 65% at the moment on our commercial only investment product. We can consider various lease terms. So typically on commercial, you see a 5-year fully repair and lease, for instance, but we can consider things like serviced offices where they're on short licenses, providing the client's got a bit of experience behind them in those kind of assets. And yeah, we can consider just the more quirky sort of asset types on commercial investment that perhaps some other lenders wouldn't be interested in. Rate-wise, at the moment on commercial, we start at 7.44%, which is very sort of competitive within our peers, and semi-commercial 6.79%. Term-wise, we can do up to 12 years interest-only terms on commercial and semi-commercial, and 3% arrangement fee on those. So type of assets we can lend on in the commercial space is semi-commercial or mixed-use property, offices, light and heavy industrial units, as I mentioned before, serviced offices, and then complex commercial investments, including vacant commercial, change of use, licenses, and short leases. The product fee on commercial and semi-commercial is 3%. Here's a commercial case study. So this was an £18 million deal, which was to convert a former hotel and parade of retail units into student accommodation. So we provided an £18 million funding package, including 10 million to a development exit loan, and also an 8 million capital raise to go on to their next development. This, as you can imagine, required a bespoke package that we put together, again, working with the regional development manager, our colleagues in credit. And a slightly smaller deal here. This was a 1.295 million deal, existing professional customer who had an exposure with us of 8.9 million, wanted to diversify their portfolio with a loan to fund a purchase of a 5-story Victorian property, and we offered them a practical funding solution that helped them repay their bridge and subsequently move on to a longer term finance. Any questions? How's that for timing, Tony?
Perfect, absolutely perfect. Gives us about 5 minutes or so to stay on track. So thanks, Lee. That was great. My questions, sorry, I'm working slightly differently than I would do normally. We've got one question from Sarita. What is the product fee on commercial and semi-commercial deals?
Yeah, I did cover that off. It's 3% for commercial 3%. And semi-commercial. Yeah.
Okay, so I was probably turning my heater off at the time because it's freezing down here today. And there is somebody else typing, but I just asked one of the ones that you put down. On a semi-commercial deal, what determines if it fits on a semi-commercial product?
Yeah, that's a good question. So the split needs to be more than 50% of the property value needs to be in the residential element, which you typically find if you've got kind of a shop with a flat above or a couple of flats above, you typically find that the value's in the resi. If it turned out with the valuation that it was valued more as commercial, then it would revert to the commercial product.
Right, which is actually a good way of doing it from our perspective, because when you've got lenders say it's down to the square footage, well, yeah, that's a real tough one to know, because try ask a client whether the flat's bigger or smaller than the shop that's underneath or the commercial that's underneath. And most of the time, they haven't got a clue. So it is a good way of doing it as far as we're concerned, because we tend to find most of the time, because the residential element is far better on the yield, that where it's going to be valued more. You'd hope it's going to be valued more anyway, but let's face it, we don't know with valuers these days. Depends on what side of the bed they get out of.
Very true.
Tanya has asked, hi Lee, client has a resi AST on a 6-bed property in Scarborough with planning permission requested but not issued for holiday let. He wants to remortgage capital raise unencumbered for portfolio investment. He is a portfolio landlord and this will be an SPV.
Okay, so our criteria on holiday lets is that it needs to have demand to be let on an AST basis. So it needs to be a single dwelling house or a single flat that could easily be let as on an AST basis as this one, but they just happen to let it on short terms. So we can do those as long as it meets that criteria and the valuer confirms the demand to let on that basis.
Okay. I think the other questions you've already answered that you set yourself, but there is one just come up. Ujwal said, would you consider my previous query mixed use? I'll go all the way back. Bear 1 second. Semi-commercial query. Applicant is looking to purchase mixed-use building with ground floor retail office space and first floor contained a self-contained masonette, along with storage area and shower room. There is planning to convert into 4 flats. Sale price under 400,000. Is it something that's acceptable?
Yeah, if they're looking to actually do the works, they'd need to put that onto a bridge first of all. Yeah. So from change of use from that would be a heavy refurbishment bridging product. So they'd need to have done a similar project in the last 5 years. But once that's done, then we could certainly also consider the exit as well. So we do have a bridge to term proposition. So when they have done the works on the bridge, when they go to do the term exit with us, we'd offer them a 1% discount off of the arrangement fee, and then they've got the certainty of having the same valuer that would already have confirmed the afterworks value, and no nasty surprises from a different valuer, from a different lender going out. As Tony said, may have got out the wrong side of the bed and have a differing view. So yeah, it makes the process nice and smooth. But yeah, that's certainly something we can look at. Oh,
and Tanya just added to this. Sorry, I meant property isn't currently a holiday let. It's let on a standard AST with one family and wants to remortgage on this basis.
Yeah, that's fine. Yep.
Yeah, absolutely fine. So Ujwal said they haven't done the similar project before. This will be their first. So probably might not fit you guys.
Yeah, might need to go somewhere else for the bridge, but we could certainly do the exit.
Ujwal, we've not only do we have an option for that, but I've also already asked my team to make contact with you after 12 o'clock just to run through some of the finer detail. And just basically get you some quotes out so you can then go back to your client and say, yeah, this is what can be done. So that will be happening shortly. And one more person type in. So I'm just going to ask one of your questions. I think you've already done this, but what is your minimum loan size for a commercial investment property?
On commercial investment, it's 150,000. On buy-to-let and our other products, it's 50,000 minimum.
Okay. Right. Well, there's no one else typing. So as we've just hit exactly 11:15, which was your cut-off time, Lee, thank you very much. As always, we'll speak to you very soon. So we'll see you very soon, probably. But thanks once again. Simon will remove you from the room. And it's good to see you actually in the office as well. I presume he's in the office because if that's his house, that's quite something quite outstanding, isn't it? With all that behind it. Okay, so we're just waiting on our next speaker, Mark, to come into the room and waiting on the slides to change. So I will start on his bit. Mark's just about to appear. Mark, I presume you're in a hotel.
Yeah, this isn't my house either.
Yeah, just making sure. What's going on today? Do all these people who work for these lenders live in mansions with fire exits? My God. Okay, nice to see you. I'll crack on straight away. Mark Shelper from Tandem Bank. You should receive this on your email this morning. Would have come over to you. A little bit on Mark. His role at Tandem includes creating and developing relationships with brokers, networks, packages, and mortgage clubs. As a national account manager, he is always looking to assist mortgage intermediaries by using his industry knowledge and experience. Mark has over 20 years' experience of the mortgage industry, having started his career in 1999 at Bristol & West, named from the past, in mortgage processing before moving into the sales team as a telephone BDM and ultimately progressing through the field-based sales team. In 2005, he joined GMAC RFC as a BDM before setting up his own mortgage business in 2007, great timing, and working as a self-employed mortgage advisor. He returned to BDM work. This is one of the longest bios we've had, by the way.
I was thinking that, yeah.
Almost in his own chapters, this one is so long. He returned to BDM work in 2012 with Aldermore and then moved on to Pepper Money in 2016 as he continued to grow and establish himself in the specialist lending startup area of the market. After an 18-month spell as a BDM working for in the conveyancing sector for Salt Refer, he joined Tandem Bank as a key relationship manager in July 22. Outside of work, Mark has 2 daughters and loves taking time out with the family. His other interests include MotoGP, football, and boxing. Tony takes a breath. His claim to fame. Mark, I apologise in advance for what's about to happen. Mark is often mistaken for Greg Wallace from MasterChef, snooker player Gary Wilson, or the plumber from Broadchurch on ITV. Now, I didn't think that was enough, really, because no one knows who the plumber from Broadchurch is. Let's face it, because I didn't have a clue. I couldn't even remember the storyline. So I thought, let's have a look. So there you go. That's the full range. We should have a vote, probably. Which one looks most like Mark? Which
one of those is the best looking? That's a tricky question, isn't it?
I think basically none of them look like you. Quite simply, none of them at all.
The guy on the right hand side is the guy from Broadchurch, and he sounds identical to me. So that's, I think, where the boldness in the voice is the one. So,
yeah, and unfortunately, when I was doing this last night, my wife detests Greg Wallace for some reason. She has no idea why. She just detests him with a passion. So when I was googling pictures of Greg Wallace, I thought she was about to smack me one because she did. What are you doing googling pictures of that man? I was asked. Yeah. And why are you googling pictures of other men with no hair? What's going on? I had to explain. So there we are. Mark's over to you. I'll see you in about 20 minutes. And
thank you
good
so
luck.
Much. Thank you. Well, you all know all about me now, don't you? That was an incredible bio at the start there. It really was. So I don't think there's anything we've missed out. Thank you ever so much for joining. Really, really appreciate the time this morning. I'm here as one of the national account managers for Tandem Bank, relatively new lender to the market. We're in our second year now of mortgage lending, so we are really moving on and developing as a lender all the way. We've got a brief presentation here to run through, outlining sort of our key niches and areas in which you could look to use our bank for mortgage lending purposes. Okay. What I would say is just at the start, if there is anything that I say today and you feel like you've got a case that you could place with ourselves, please feel free to contact me, to send me copies of credit files. That sort of tends to come up and that'll come out in the presentation. But anything you want, new business, cases in progress, anything that's even completed, anything at all that you possibly want from Tandem Bank, and you feel like I might be able to assist you, please feel free to contact me. I try to make myself as available and approachable as possible in these situations. So moving on. Why would you use Tandem Bank? So what are we here for? So Tandem are a specialist lender. Okay, we do residential remortgage, residential purchase. So we're not in the buy-to-let market at the moment. We will be at some stage. We're not in the bridging market at the moment. We will be at some stage. But right now we're looking at residential purchase and remortgage business. We're looking for those cases that have failed with high street lenders. So if your likes of Halifax, NatWest have said no to your client for whatever reason, and you're looking where you can place the deal, we would be in that sort of array of lenders that could look to help you with your high street declines. That means anything maybe credit related. That's a big focus for us at Tandem, looking to try and help people that have failed with the high street because of credit issues. That mean they don't have a good enough credit score, so that could be people with maybe not enough credit to pass a high street credit score, for example, like a first-time buyer with a very thin credit profile, all the way through to maybe the other end of the spectrum, where someone has too much credit for a high street lender. For example, they've got 40, 50,000 pounds on credit cards. They're looking to consolidate it, maybe at 90% loan to value. And again, that's something that Tandem can help with. People who maybe got too much credit for a high street credit score. Off the back of that, we are also looking to help people that have had credit mispayments, CCJs, defaults in the background as well. Particularly at a niche that we have is that higher loan to value. So I'll be talking about all of that throughout the presentation. That's generally the market that we're looking to try and assist in obtaining mortgage finance. Okay, so some USPs from Tandem, very sort of basic setup here on this particular slide, but I just want to explain a little bit about how it works at Tandem. So you can see first off on there, we go up to 90% loan to value, which gives us a real advantage in the peer group that we work in. Most lenders, not all, but most lenders will go to 85 or 80% loan to value. We can get a little extra bit further and go to 90%, which really does help, particularly with a first-time buyer. Of the lenders who currently offer 90% loan to value, I genuinely feel that we're up there with the amounts of adverse that we can take at that level. So we please don't give up if your sort of preferred choices or people that you've used so far have said no. Remember that Tandem are in this market and it's something that we might be able to help you with. So please feel free to contact us if you have any of those. Now, the way in which we look at things is we have what we call a fair view credit assessment that looks at the client's credit profile over the last 2 years. Not to say that we completely ignore stuff that's happened outside of 2 years. For example, there are little caveats. If the client was repossessed 4 years ago, we wouldn't like that. But generally speaking, when we look at our product range, we focus on what's happened within the last 2 years. So what I'm indirectly saying there is if your client had a CCJ, doesn't matter how big it was, doesn't matter if it's satisfied or not. Okay, we don't look at that. We look at the registration dates of CCJs or defaults. And if they happen to be registered over 2 years ago, that client would fit onto our top tiers of our product range, which means they get access to our highest loan to values and our best interest rates. Just for the sake of confirming our rates that we offer, the rate range is from 5.69 at the moment all the way through to late sevens. I think it's actually 7.99, so we couldn't get later in the sevens in that, could we? But all the way from 569 through to 799 at the moment. So that's sort of the rate spectrum that you'd get from us. And like I say, if you had a client that had a CCJ for £5,000 maybe registered in February 2022, because believe it or not, that was 2 years ago, they would fit into our top product ranges. So you get 90% loan to value and you would get access to our best interest rates. We do ignore some small defaults, maybe as you can see on the screen here, communications, utilities, they're under £350. So even if they were registered yesterday, it doesn't affect the product here that your client can apply for, which is really, really helpful. Okay, so what I want to go on to on the next slide is just to explain a little bit about how our tiering system works. So like many of our competitors in the specialist lending market who deal with residential business, we have a tiering system where the basic concept is, the less adverse, if you like, the client has got, the higher the tier they go into, so the better interest rates they get and the higher loan to value they have. So we're no different. So at Tandem, we have 4 tiers of product offerings. So Tandem 0, Tandem 1, Tandem 2 and Tandem 3. And we wanted something that was really easy to understand. So you know when you're looking at a Tandem product, which criteria tier your client will fall into. I don't want to, maybe push too much other lenders' criteria, but there are various lenders out there that do things like almost prime, near prime, be a bit more obvious here, Pepper 48, Pepper 36. There's various tiers that lenders offer. So we've got Tandem 0, Tandem 1, Tandem 2 and Tandem 3 because we're really, really imaginative at Tandem Bank. Now, we wanted something that means something, okay? Something that where you are with what you're doing. So Tandem 0, what that means is 0 CCJs, 0 defaults, and 0 missed mortgage payments can be registered within the last 2 years. So don't forget, if it was outside of 2 years, it won't affect the product tiering. But if it's within the last 2 years, this is where this system kicks in. And Tandem 0, where you can get 90% loan to value, means that you can have 0 CCJs, defaults, and missed mortgage payments within that 2-year period. Tandem 1, the people on the ball here might be expecting me to say this now, but Tandem 1, you can have 1 CCJ, 1 default, and 1 missed mortgage payment within the last 2 years, okay? And your client would fall into that category. It's each of them, so you can have 1 of each, and if it's a joint application, each client can have 1 of each. So we can take quite a bit of credit issue. We're looking at number of CCJs again. Doesn't matter how big they are necessarily. Doesn't matter if they're satisfied or not. It's all about the date of registration and the number of them within the 2-year period. At Tandem 1, you can also get 90% loan to value. So just to spell it out to you, if you have a first-time buyer who's got a £5,000 CCJ, registered 5 months ago, for argument's sake, but just 1 of them, then that client would fall into our Tandem 1 category, and you could get 90% loan to value from us. Tandem 2, as you'd expect, you get 2 CCJs, 2 missed mortgage payments, and 2 defaults. Tandem 3, we will allow 3 CCJs, 3 defaults, and 3 missed mortgage payments. So it really is as simple as that 1, 2, 3 that we describe. And again, it's something that we wanted to be known for, and hopefully it does catch your interest with any of those cases. Tandem 2, just to make the point, you got to 85% loan to value, and Tandem 3, 80% loan to value. What I would say at this point is that although we've got a relatively simple system to work out what rate category your client will fall into without doing a decision in principle, please feel free if you wanted to. If the credit file's got 100 pages and you really feel like you haven't got the time or inclination to read through every single page of it, you're more than welcome to forward them across to me. My email address is all over our website, and you may well have details from today's presentation as well, with my contact details on, everything else about my life at the moment, it seems like, after that bio. But please, feel free to email files to me. I'm happy to tell if we can do the deal. I do think that when you're looking to use potentially a new lender for the first time, a little bit of hand holding, talking a case through, making sure that you know what sorts of things we're going to ask for, make sure we don't get caught out, is a really wise thing to do, and I genuinely make myself open for that. At the same time, if you did want to run a decision in principle on the system, we don't ask you any questions about adverse itself, so you don't need to key in every single CCJ default that the client has, because sometimes they don't know what they've got, sometimes they don't always tell you the truth on what they've got, dare I say, but the system will actually automatically spit out the rates for you, so you don't necessarily need to know up front, but I just think it's nice that you understand the way in which our product system works. The next slide we have puts it in table format, which is a little bit easier to read, and again it just details exactly how we look at things and how many of these instances that you can have. You might notice at the bottom of this slide we mentioned unsecured arrears as well, something that I haven't mentioned so far. There's a reason for that, and that particular part of policy is very much under review at the moment, because it is quite harsh, and it does sort of fly against some of the things that we want to do at Tandem. And as a new developing lender, we do find these things in our criteria. So if you've got a case immediately, please be mindful of the fact that we do look at worse statuses on unsecured credit, which could hinder your case proceeding if there's something recent within the last 2 years on there. But again, feel free to send me a credit file. I'm happy to sift through it and tell you if we can lend, and if you have a case in the long term. And I mean, I think we are looking to sort of resolve our unsecured criteria within the next couple of weeks, even. So it is quite an imminent thing that that we're genuinely working on. So if you think about CCJ's defaults and missed mortgage payments for at the ongoing basis of Tandem, I think that's really the best way to go with it. Okay, so lovely. Right, there we go. So you can see we're looking for very much stuff that fails for adverse credit reasons on our product range. A few additional points I'd like to make are okay, if that's okay, is that we also cater for people that have had bankruptcy and IVA. We need clients who have been discharged for at least 3 years, but we can go all the way up to 85% loan to value, which is fantastic. We have a very flexible attitude to payday loans compared to a lot of lenders in our space. You'll find that many lenders tend to say things like you can't have any payday loans within the last 12 months. We didn't really want to do that at Tandem because we're quite aware of the fact that clients sometimes don't understand the implications of taking out a payday loan. Does somebody sort of paint the picture? A client who maybe single parent family, their car is broken down, they see an advert for Quick Quid, many other payday loan companies or short-term lending companies are out there. They see it on TV and they think it's the answer to their prayers. They can get the car fixed, they can drive to work, they can get the kids to school, and they can get that money really quickly. But what they don't know is that it means they can't get a mortgage with many lenders for a period of a year. Now, that client could well have obtained that finance elsewhere, maybe using an overdraft, credit cards, whatever it might be, a gift from a family member. But they haven't. They've done it with a payday loan, and then that means that they're basically very, very difficult for them to get a mortgage, particularly if it is very, very recent. And we just feel that that doesn't mean that it shouldn't get a mortgage for a whole year. So we have a policy where we allow 3 payday loans to be taken within the last 12 months, and still have one currently active. You can even do that at 90% loan to value for a first-time buyer, maybe. So again, I want to push this point, adverse credit, higher LTV, we can be a real avenue for your clients. I mentioned debt management plans on this particular slide here. Now, I've been in this game for quite a while, and I know that policy that we have is a little bit out of kilter with some of the other things that we do, and other lenders, you will be able to get better terms than that, I would say. But I just like to be balanced in my approach. When I present Tandem, you may well think that we'd be really good at debt management plans, but in fact they need to be settled for 12 months, and we would restrict your loan to value to 80%. So just be mindful of that. I wouldn't want to waste your time with any sort of those type of inquiries, unless of course the rate was right and it did fit that. So so that's why I highlight it. Okay, so then moving on to the next part of the presentation, I mentioned first-time buyers, again, because of our high LTV. At Tandem, we really want to help everybody get on that ladder, or maybe repair their credit situation so they are unable to move to the high street or back to the high street. So purchase, we again, this sort of focuses on how we can be a little bit flexible and help more clients get into the market. We're quite, we have some sort of different methods of looking at a deposit maybe from other lenders out there, and particularly in our space. So equity gifted deposits are absolutely fine. So if you come across a case where mum, dad, brother, sister, auntie, uncle wants to sell their property to son or daughter, for example, concessionary purchase, gifted equity, there's a whole sort of range of lender names for this type of transaction, concessionary, and high street, no problem. No money needs to go in. So you've got £100,000 property, for the sake of my maths, and the client wants to purchase it off of a family member. They've got no cash themselves to put into it. Quite easy to do in the high street. Several lenders will do that. Your client has some CCJs or defaults or missed payments in the background. It then becomes a lot more difficult to place these cases if the client has some CCJs or defaults without putting in some deposit themselves. So what we say at Tandem is that a client can proceed with no actual cash themselves going into it. So you have a 100 grand property, 90 grand loan from Tandem, and a 10k equity gifted deposit. It's absolutely fine. So we can work with those, and those cases do crop up. Off the back of that, a family cash gifted deposit is fine as well. Again, we're quite flexible with the definition of family. We can accept aunties, uncles, that kind of thing, alongside more closer family members. So that's helpful. It can be an unlimited gift as well, which is really, really helpful. We'll also accept an unsecured personal loan. as part of the deposit. It does need to fit affordability, but this really helps us out. So if your clients have maybe saved a 5% deposit, and you're hoping to go Halifax and that west, but you've been turned down for whatever reason, we will allow your client to top up their deposit with a personal loan, which is really helpful. So it means that they can get onto the ladder. So you can have 90% from Tandem, 5% personal loan, 5% from their own resources. Wouldn't be a problem to ourselves. It also helps if you remember I say things like, we do 85% loan to value for somebody who's been ex-bankrupt. If they've only got a 10% deposit, maybe you could use a personal loan to boost their deposit and still qualify for to get the mortgage. So again, just another solution that we're trying to find to help people get on the ladder. I've had a question come up on the screen, family gift from Turkey or Iraq. We probably might, we have to go for our full audit trail purposes. We need to be happy with the with it, and if it's one of the countries listed in an area that we struggle with, which I think probably would be for Turkey and Iraq, we probably have to say no. But generally speaking, please contact me on a case by case basis, and we can deal with gifts from different countries, if you like, as a generic answer to that. Okay. Moving on from that, then, just some additional criteria in around other things that we can do to help other than adverse. So self-employed clients, we need a 3-year track record for self-employed. I appreciate that our peers might go 1 or 2, so I lose a little bit there. However, we are the latest year's figures when it comes to affordability. So big jumps in income, no problem to us. You can go 5, 10, 90 grand, we can do that. And even at 90% loan to value. So that's a real big win for us, using latest year's figures at 90% loan to value. For clients that have the adverse, they go into our top product range. The rates will be higher than high street, but maybe not as high as you might think that they could be. We'll also allow a client to use, one thing I should say on that point as well before I finish it is that although we require 3 years trading, they can have a change in sort of entity, if you like. So if they've been self-employed for 2 years and then limited company for 1, so change in status is absolutely fine. We don't currently do shared ownership, Deirdre, I'm sorry, but it's something that we'll be looking to do in the future. Sorry if I'm answering these questions. I shouldn't. I'll leave the rest of them. So we can look to sort of help with a change of status, maybe for self-employed people currently. This next point is quite interesting. If a client owns a limited company, or they own at least 50% of it, we can actually look to consider using their share of their retained profits or net profits that they haven't drawn down for tax purposes. So most lenders will be driven by salary and dividends when you have a limited company, as we are if you visit our own devices. However, if the client owns at least 50% of their business, we can look to use their share of their retained or net profits as well. So that gives us a bit of an bit like I think Coventry on the high street do, but if you can't go there because they've got some adverse credit issues, then maybe we can help you there. Other income streams that we have, 100% of second jobs we can take as long as they've been doing it for 6 months. Court ordered maintenance or not, 100% of bonus, overtime, commission we can take, which is really great. So extra income sources we can be really cool with. Just moving on to our sort of final slides now, adding fees to the loan. So first off, all of our products come with no upfront booking fee, free valuations up to £700,000 for a remortgage, and we can also add the completion fee over and above 90% loan to value. If you want to charge a broker fee, we'll allow, no one else does this I don't think, but we'll allow you to add your broker fee to the loan. We'll pay it to you direct on completion, and we don't charge any interest on that. So it's a really different concept, but it's a way of allowing you to add and charge your broker fee to make sure that these cases are commercially viable for you, because they do take a lot of work. And our 0.5 prop fee that we pay is great, but you might want to charge a broker fee. We can add it to the loan, pay you direct on completion, and that's an interest-free part of the loan that we offer. So something that's really interesting if you do charge broker fees. Benefits for specialist lenders, features of the high street. So we will allow porting We will allow further advances. There are some restrictions around it, but because we're a bank, it's a little bit easier for us to do. But you can get product transfers from us as well at the end of their 2 or their 5-year fix. So that's really cool. And also, moving on to the final section, do you need a solicitor on a remortgage? We, on a standard, straightforward, like for like remortgage, not transfer equity, lease extensions, a standard deal. We do not involve a solicitor. So it's a title change from maybe Bluestone to Tandem, for argument's sake, Santander to Tandem, some debt consolidation in the background. But it really speeds up the the legal process by not instructing a third-party solicitor to do the work. And probably haven't got time to run through the exact sort of detail of it now, but as soon as you get an offer from us, there's no reason why you can't complete within a few days using our lender-only legals that we're really pleased with. So I think I'm pretty much to time, I'd like to think so anyway. If anyone wants to interject, then please say, but I've come towards the end of the presentation. So if anyone does any questions at all whatsoever about our offering, please feel free to contact myself or David, and we'd be more than happy to help you with any inquiries that you have.
Sorry, you threw me a little bit there because you jumped about 3 slides, and I still have my heater on in the background, which is
Bless
very
you,
noisy.
no worries.
Run across the office and turn it off, which wasn't such a good idea. Thank you for that. Obviously, don't forget, everyone, we are an accredited packager for Tandem Bank. I just want, we've got a little bit of time actually, because I think I couldn't really hear too well, Mark, because we've never had a presentation before where it's been accompanied to music in the background, which is good.
Oh, sorry.
That's okay. That's not your fault. You're in a hotel, but I did like the guy with his bike and all of his gear on that walked past you and went out the fire exit. But at least the only other time someone was presented from a hotel, the fire alarm went off and he stood up and walked off.
Well, do you know what? I'm actually at the Birmingham NEC and it's Crufts today, so this is the quietest corner I could find because there's dogs barking everywhere.
That would have been a new one. That would have been a new one. So I'm not entirely sure. I think you answered a couple of the questions. So I think Ricky's just put on here. How many applicants and income can you use if I have a client that wants to use 4 incomes?
It's actually 2 is our maximum that we can use. Yes. I didn't answer the interest only question. So we are capital and interest only at the moment. So it's repayment only. So yeah, not interest only as yet. It is on our list of things that we look to do. We have a family gift deposit from India. If we've got an audit trail that we can be comfortable with, that's the key to it. And it is very difficult sometimes to answer questions off the cuff on that nature. But if we do have an audit trail that we're comfortable with, we could accept a family gift deposit from India, but that would obviously probably be a bit of paperwork involved to give you a straight answer on that one.
My rule of thumb on that is quite simply, and this is for everybody who's watching, if it's a situation where would you accept that as a sensible deposit? I mean, we had once where the guy was in Kuwait and had been given 5 million quid from his cousin who was in Iraq, and this was just at the time when it was being publicised that the Americans had lost 6 billion in cash in Iraq after they invaded. They had no idea where it had gone. And all of a sudden, this guy turns up with $5 million available, or £5 million actually it was, available to give to his cousin to buy property in the UK. Again, we've got to be sensible on this. Does it make sense? Would you lend if it was your money and you didn't want to go to prison when it's found out to be money laundering is involved? So always be sensible is what really the case. Also, we've got to stick with what lenders have as well. Maz has asked, do you lend on auction property?
We can do, yes. I would say case by case. We'll make sure everyone knows where they stand. But there's no reason why we couldn't lend on an auction property necessarily. So yeah, if you've got one, we're happy to take it on.
Okay. Maz has asked, what is your LTI?
4.5 is our maximum income multiple that we would go to.
Okay. Tanya has asked, on bankruptcy, if client's income or his wife's, but both on the mortgage, looking to be 5 years clear, and income is self-employed, would this be okay? Any more criteria around this?
Okay, so with bankruptcy, they need to be discharged for 3 years. That's the first thing I should say. 85% loan to value maximum. If the client income is all his wife's, but both on the mortgage, and the client is self-employed, would this be okay? So I've got more questions. So me little think. Yeah, so well, I mean, if it works on her income, yeah, that would be fine as long as the bankruptcy was, cleared. They're both on the mortgage now, 3 years discharge, and there's no remaining liability. I think that's probably the key thing to say. But he's now in, got a new job or he's working now, then we'd be okay with that. I guess where we'd be a little bit guarded would be as if there was anything, like obviously he switches income, putting it through his wife's name rather than his own income. That's what we need to be a little bit careful on that one, I think, isn't that what my brain says to me initially. But if we could get comfortable with the deal, there's something in our policies that we wouldn't. And again, if you something you wanted to run through, I'd be more than happy to discuss it on a case by case basis.
Tanya, maybe just contact my regulated team and they can put the question over to. Obviously, Mark's going to have difficulty. I think you're at the Are you at the Primus network today or event?
It's actually the Right Mortgage Network.
Oh, it's the Right Mortgage Network event.
Roger and Rich.
I knew it was some mortgage event, but the reason you're in a hotel, obviously. Obviously, you're not going to Crufts dressed in a suit, I wouldn't imagine. Maz has just asked this regarding the auction property again. I would say probably, Maz, if it's being bought, if it's being purchased at auction, and you've only got 28 days to get it completed, my advice would always be to bridge it, especially if it needs some work doing to it. No term lender is going to lend on a property that's not habitable.
I completely agree with that, Tony. Yeah. Yes, that's where I'd be going with it. Yeah.
Yeah. So really, it's got to be some form of bridge is really the best route, because getting something through, it can be done in 28 days, but 28 days is not the norm for a term mortgage. Neil has asked, I'll take this as the last question. Neil has just said, what about pension income and maximum age and term?
Okay, so we can accept pension income if it's earned at the moment. However, our maximum age at the end of term is 70. So obviously that restricts clearly the amount of cases that we do at that level. So we have a 35-year term, maximum age of 70 at the end of it. We can accept pension income if it's something that's currently earned, so from someone's retired a little early or whatever, but we couldn't go beyond the age of 70 at the end of the term. So that clearly has some restrictions on the answer to that question.
Okay, fine. I just wanted to stress one thing when it comes to Tandem, and I've been banging this drum for years when it comes to the legal side of things. So if you have a client that's looking to refinance or remortgage, and I've been in my property now for 17 years, I've got the same mortgage that I took out when I first moved in. But if I was one of those that decided to remortgage to chase the better deal every 2, 3, 4, 5 years, why does it need a solicitor to be involved every single time to do the same work over and over and over again? And we had a solicitor the other day quoted 1,800 quid to do a simple refinance of client's property. £1,800, and this property has been owned for like 30 odd years. It just beggars belief sometimes. So
definitely. I don't know how much time I had to say it, Tony, to be honest, when I was in it, but literally you live there 2 years, 5 years, 10 years, however long, you're still going to live there when you complete. So
yes.
What is the need for all of this?
There is no need. So quite simply, Tandem took the view that exactly what we've had in the second charge market now ever since I've been in it, which is 40 years. Quite simply, own in-house legal people. If you're doing a remortgage, all you need to do is a quick look at the title to make sure it's okay. You register a priority at land registry to make sure no one can lend before you do, so you're then taking a third charge. And it's as simple as that. If anything adverse comes up, then it can be dealt with. But in 99% of cases, it's very simple. Why get somebody involved to charge 1,800 quid, add 3-4 weeks to the processing time, when quite simply with Tandem, it can complete the same day. It literally can complete the same day. There's none of this nonsense. Oh, instruct solicitors. Oh, we've got to cover the legal side. We've got to cover the ID side. We've got to cover this. We've got to cover that.
It's all duplication, Tony.
It's no reason for
what gets done.
Yeah, it's no reason for it at all, especially if it's the same solicitor who's asking someone for, had one recently, he's been their solicitor since the year dot, and he's asking for up-to-date ID because he has to confirm their identity. When we've already provided him with copies of the bloody stuff, but he has to do it himself. Of course, he charges for it because he's charging £300 an hour. So it's good that I hope more lenders follow suit with this, because it really is the way forward when it comes to the legal. On remortgages, this should not be happening on bog standard residential or buy-to-let properties, where over and over again clients are having solicitors' fees incurred for a pretty shoddy service. Let's face it, most of the time.
Well, it works really well with debt consolidation in particular, because of course, you can have someone who you've gone through the whole trouble, you've arranged their mortgage for them, they're going to be saving £500 or £600 a month, and it takes months potentially, doesn't it, for it to complete? And you're sat on SVR, you're paying the higher level, you're paying all this out on unsecured credit, and it can take as long as you like to do the advice on a debt con deal, but as soon as you decide that's what you want to do, want to complete, don't you? And this really helps us to get those deals through a lot quicker.
Well, Mark, thank you very much. We haven't met before, but it's been lovely meeting you. We hope to see you soon. Maybe pay a visit down with Roger or something fairly soon.
That'd be lovely.
Come and see us. Come and visit our new training room that I'm publicising all over the place on LinkedIn. And come and see us.
Thank
come
you.
Meet the team.
Thank you very much.
Okay.
And sorry for being in the hotel with the music going, but
that's no problem at all. At least there's no dogs barking, which is the main thing, which is good. Simon will remove you from the room. Don't do it yourself, because if you click the wrong button, you will close down the whole thing. So he will do that. What we're going to do, everyone, is get Gary back, because he's going to be calling out a number, and I just need to look on my phone again, because I'm doing all of this remotely today, so it's a little bit more difficult than usual. And now my phone won't log in. So I need when Gary comes back in, he's going to be very quick. He's going to give me a number between. You there, Gary? Can you hear me?
I can.
Right, he's a new location. Can you give me a number between 1 and 64, please?
16.
16. So Simon, who's based in the main office, will now message me with Simon is typing, and number 16 is. Drum roll, please. They must have a very long name, because it's taken him ages to type this. Okay, it's not a long name, actually. It's Graham Faulkner from Barker and Broad Limited. So congratulations, Graham. Castle Trust will be sending you £100. And that will be, that will be, they should hopefully be in touch today. Gary, thank you very much. I'll let you get back to work and work some of our cases. Thank you very much indeed.
Cheers. Take care, Tony. And congratulations,
we're now going to change the slides over again. I actually jumped ahead on this a little bit, because we should change the slides over first, because I just wait for these to go. There we go. Right, so these I still haven't dealt with, so forgive me. I will have these done. I've got plenty of time in my hands at the moment, because I can't go into the office for 2 weeks. So I will get these slides redone so that they conform with the first lot of slides. So you can ignore the first one, which is this, because I've just done that. And we can go on to this. This is about us, a little bit about us. For those of you that don't know, those of you that have seen this before, I understand if you think I've heard all this before, I don't need to hear it again, and you want to go and get a bit of work done, no problem at all with that. For those of you who haven't, it's a little bit about us. We are classed as a pretty much we can be classed as a packager, we can be classed as giving advice to clients. It's that however you want to work it. If you want us to package a case on your behalf and you have all client contact, we can do that. If you want to introduce the client to us and we give the advice and have client contact, we can do that too. We can mix and match between products, we can mix and match between clients, entirely up to you. We complete a higher percentage of the cases that we do give the advice ourselves for whatever reason. But that is really because we are bloody good at what we do, more to be quite frank. And why are we different? Well, it's not the products we offer. We've got some exclusive. We've launched an exclusive this week on second charges, which is literally just us. That we have a group of investors, one of which is watching today. Hi. I won't say your name, and the group of investors that are helping us with or offering second charge products. So this is exclusive. No one else has got this. Takes any amount of adverse, pretty much CCJ's defaults, and a certain number of arrears in the last 12 months. I'll go across that. I'll talk about that another time. It's pretty much our lender relationships is why we're different, because I've been doing this so long now. Quite simply so long that people that I grew up with in the industry in the 80s and the 90s are now sitting in sort of positions of power. So people that I would have considered friends and went out for a pint with from time to time are now CEOs of their own company, or they're on the board of the company they're working for, or that type of situation. It does make a huge difference. It really does. Because I'm not dealing with people at underwriting level. I'm dealing with people at director level. So if I have a case that I need to sort of like present to somebody, it's very different me talking to a decision maker as to whether that case will go through, and an underwriter talking to the decision maker. I mean an underwriter at the lender, because I used to do it myself. I would sometimes go to my director, and some cases I really didn't want to do, and I would just put them in a very bad light and he wouldn't do them. The ones I put in a good light, he almost always did without fail. So it's always best to speak to somebody who is at the top of the tree when it comes to getting those decisions, because by Christ, does it make a difference? It really does. It's the people we employ is the main reason. All of my staff have a minimum 5 years experience in what they do. They can't get through the door unless they've got that. And the main reason, I can't really stress this enough, mature with life experience. I mean, pretty much everyone that speaks to my staff and then comes to me and says, I remember one guy who was not keen on actually having to come through us to access a particular product, now uses us on a regular basis because he says, your staff are fantastic. The reason one of the reasons they're fantastic, not only they know what they're doing, but you can actually have a conversation with them. They're not 18, 19, 20 years old, just fresh out of university, college, or whatever else, and have no life experience. They have that experience. They've been in the industry. I think we've got one coming up for 30 years in the industry, another one coming up who's been with me since 1997. You can't buy that sort of experience. You really can't. On the rare occasion that something goes wrong, they recognise it. That's the thing. They don't try and sweep it under the carpet, as some less experienced staff will sometimes do. They will get it sorted. That's why we don't get complaints. Pure and simple. It's not our newest awards in the financial press. All of you that watch this on a regular basis will know that I have an absolute hate of the award system for brokers, because I've seen so many times someone has been given an award because of the amount they spent on advertising, or they're best mates with the proprietor of that particular publication, or whatever other reason. It's normally something financial. But just it's for me, it's just not for me. I will never ever be given an award by the financial press because I'm too critical of it more than anything else, and I'd never get nominated either. And they certainly wouldn't have me on a judging panel, because I wouldn't do it in the first place. It's how seriously we take the prevention of crime, financial crime and compliance. So we are very hot on this. We've been given 3 lots of feedback now by the NACFB when they've done compliance visits, and quite simply, we are top of the tree as far as they're concerned. And with the resources we've got, they cannot believe how compliant we are with the way things have to work. I far prefer to do it that way. I don't want to lose my business or get fined out of existence by the FCA because we just decided to try and bodge it a little bit. That's not the way we work. What else can we offer? One underwriter from start to finish. Commission paid immediately upon loan completion. I've just been in hospital for a couple of days. If I'd had to pay somebody, luckily I didn't, but if I'd had to pay somebody on Tuesday night, for example, I would have done so whilst I was off as high as a kite on fentanyl. But I would have done it. I've done it when my daughter got married. I've done it when I renewed my wedding vows in Spain in 2018. It's something we always do. We pay if we've got the bank details. Your bank details, we pay you on the day of loan completion. Unlike obviously some of the other situations we've got where we're still waiting on a 10 grand commission payment from the beginning of February from a lender, which is not acceptable. But it's just because of the way they work, and I believe we're getting it on. They pay on the 14th of the month after completion. That's not acceptable. I mean, my broker partner was paid on the day of completion, beginning of February. So, and that's the way it should work. No commission clawbacks unless it's fraud or unless the client cancels the agreement, which obviously some lenders allow that to happen. The other thing we offer is, some time ago, I realised that what's out there, I mean, we all use sourcing systems for first charges. We don't tend to use them too much for buy-to-let anymore because I just find them so inaccurate, horrendously inaccurate. So we set up our own. So for first and second charges regulated, so it's first charges where we package for certain lenders, not everybody on that's basically that's out there lending, because that would be daft. We have loan quote, bridge quote, as you can imagine, it's just for bridging. Commercial quote covers commercial, buy-to-let, semi-commercial. For those lenders you won't see on the quoting systems. So we have access to all of these. And if you phone my staff and say, I've got this deal, and you give us limited information, we can have a quote sitting in your email within about 90 seconds. Very, very simple. Our products, everything except for equity release. That's the only type of finance that's secured on property that we don't do. And we've also now introduced probate loans, which is becoming more and more popular. But we're seeing a lot more of that. If you have solicitor contacts, then speak to them about the product you can actually have to offer their client, or it's pretty much their clients. And this can solve a lot of problems, whether it's paying tax, whether it's actually just raising some money. We had a guy recently who raised 100 grand from his mother's estate, where he was the sole beneficiary, but it was obviously still going through the process because his business was about to go pop, and that 100 grand actually helped him survive. If he'd waited, he wouldn't have survived. Our feedback, I could give loads of feedback. As you can imagine, we've got folders and folders and folders of it. This is a fairly recent one, and this was a bridging loan in December 23, and this is broker feedback. So this is one of your competitors. In fact, he might even be watching today. I don't know. I've not checked. But quite simply, this is someone that was new to the process, and I won't read the whole thing because we haven't got time. But I would certainly not hesitate in recommending Kirsty or Specialist Hub services or revisiting them in the event of my own needs. Now, you can't really have much better than that. If you're a mortgage broker is saying, if I need something, I will come to you, that's about as good as it gets. And that's on Trustpilot. If you want to have a look, I mean, our Trustpilot, I think we're at about 4.8 out of 5 now. It's only because 2 people gave us 4 out of 5 rather than 5. Still not quite sure why, because the reviews were, "You're fantastic," and they gave us 4 out of 5. But that's we very, 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 very rarely get any adverse feedback. If we do, it's normally about a lender or a solicitor. That's the only bad feedback that we get, is about the other parties that are involved. And a quick case study. I'm going to shoot through these because we did say 2 hours today, and I'm already at 11:59, so I've got about a minute to finish. This is a client we've now helped 3 times. Bought a property, 22 bedroom, had her permission for a 10-bed HMO. So we helped with the purchase. Because planning was so up the spout and there were so many delays, he didn't get the planning through after the bridge expired after 12 months. So we rebridged it. And then we've just recently, with the help of Shawbrook, NatWest and MT Finance, because the valuation massively, I mean, it was over £1 million it undervalued on the commercial property. We've just recently completely refinanced. So he's out of the initial bridge. They're selling the property that's with MT Finance. And our broker partner, I think I worked this out last night, is at £73,000, all paid on the day of completion over the last 3 years since 2021. Is that? I think it is. As you can imagine, he's a very happy man. Very, very happy man. Another one, I'll be very quick on this. I mentioned this one earlier on. This was the most difficult case I've ever been involved in because it led to many nights where I was working until 9, 10 o'clock at night, just trying to sort out the absolute mess that these clients were in because of basically people leeching off them for many, many years and just actually charging for work that hadn't even been done. So we had 19 properties. 5 properties had charges registered that were still registered that had been repaid 16, 20 years ago. A lease on one flat had never actually been, the lease had never been issued to or registered. We was even told that we was given the wrong address for one of the security properties. It was only found when the surveyor was instructed and they turned up on someone's doorstep that actually, no, I own this flat. Why are you here to value my property? It was awful. I can't tell you how bad it was. But we got it through, introduced about 45 grand when that completed on the day of completion. A very happy man. I won't go through his whole testimony. He said, if I give you more than 5 stars, I would. And he's found my staff to be responsive, dedicated, success, and fun to speak with. There you go. That's from somebody that's actually now retired from the business. And he's given us the guy I mentioned earlier on, who's he's earning more than he was when he was actually doing it full time. If you want to submit a case, with the feedback form you'll get shortly, you can actually just put on the type of inquiry you have there. My staff will be in contact. You can complete a decision in principle form that will be or has been sent to you. There's one for every product. Go to our website and you can submit all cases online. Or alternatively, give the team a call and you can run through it and see what the best course of action is. Please follow Specialist Hub on LinkedIn. If I've not followed you, could you follow me as well? Always very handy. We're doing a lot of activity on LinkedIn at the moment, all around basically what we've just set up with our training room. It's getting a lot of traction, but also trying to get our followers up on LinkedIn as well. So please follow us. It takes literally seconds to do. Just search for Specialist Hub. Next Specialist Mortgage Web Show, 18th of April, a little bit later because we've got Easter coming up and a few other bits and pieces. We've got MT Finance, Precise Mortgages, Redwood and Together, dealing with different various products as always. And this all goes back to the usual format of 4 lenders. And after that, every month up until November, you can register for as many as you like. You can register for all of them at the same time if you wish, entirely up to you. Coming up, this is in a couple of weeks' time, Scott Marshall, who's the managing director of Roma Finance, someone I've known for a long, long time, is involved in our first Sutton Specialist of the Year, and he is talking about volatility creates opportunity. More details on our website on that. I won't read out the whole thing to you, but that's going to be an interesting one. He really does know his stuff, Scott. He set a business up from scratch, and it's now one of the most successful bridging lenders out there, and a really lovely guy too. But please, I urge you to watch that one and sign up and watch that one because it's going to be a good one. If you want to watch these are the ones that are coming up in 2024. I've already mentioned earlier on about the ones in 2023 that you can watch on catch up. We've got Simon Knight, CEO Lenco, former CEO of GMAC RFC. We've got Josh Knight, no relation to Simon, who's the Sales and Marketing Director of Octane Capital. Roger Morris, Sales and Distribution Director of Tandem Bank, are all coming up this year when they can fit us into their busy schedules. Also, Anna Lewis, Commercial Director of Castle Trust, and one other to be announced soon, which isn't actually a bad silhouette because that is actually an exact hairstyle. But that's to be announced soon. We're just trying tie her down to giving us a commitment, but I can't see a problem with that. That's all coming out in 2024, and all part of what we're trying to do, which is really just educate everyone out there as much as we possibly can and do it for free, which is the main thing. Feedback and giveaways. You should anytime now see a little orange button appear. There it goes, like magic. All the things I talked about today, the downloads, you can just literally download those by clicking on that. Don't click on it yet. And also register for all the previous shows, all the future shows that we've got, all available on one page. Your CPD certificate will be emailed to you by close of business tomorrow. And if you don't receive it, as I said earlier, just check your spam first and then give us a call. Please don't give us a call before 5:30 tomorrow, because it is quite an involved process getting CPD out on an accurately getting it out. So just bear with us. That will be with you. Feedback, please help us out. Just go on to either Google or Trustpilot and leave us a review. Don't go on to Specialists Hub, which is a training company that sort of like cropped up just before COVID. And it causes a few problems. But if you would leave us a review, as I said before, these are all free to obviously delegates, also free to lenders as well. So we don't charge lenders for this. This isn't a money-making exercise for us. This is quite simply, we're here to educate. That's what we're looking to do. And also, obviously, try and get business coming through us wherever possible, because we are different to any other packages you'll use out there. I can guarantee it. Today's sponsor, big thank you to Castle Trust once again, and also a big thank you to them for also sponsoring the prize draw. I wonder what else they're going to be sponsoring, not quite sure, but they've done a lot for us today, so a big thank you to them. But they are a big part of what we do, and as you can see by the products that they were talking about earlier, there's an awful lot they can offer. And that's not bad, actually. That's 12:05. Thank you for attending. Enjoy the rest of your day. I hope we'll see you again soon. Please join us on the 20th if you can, or next month for the next Specialist Mortgage Web Show. But today's been a pleasure. Thank you.